Most of us like the dollar. It has lasted for centuries, survived 2 world wars, the Great Depression, and a siege by inflation. It works pretty well as a global currency. So do we really need a purely digital alternative? One that isn't backed by the Federal Reserve, lives on a computer network, consumes vast quantities of electricity, and has no intrinsic value. The profile describes Bitcoin, of course, and it is having a moment. What is Bitcoin? The story starts with Satoshi Nakamoto, a mysterious figure or group who developed a digital currency that anyone could send and receive through a decentralized computer network. Transactions are validated and recorded by independently operated computers known as miners who compete to solve cryptographic puzzles. The miner who solves the puzzle first shares the results across the network. This is all very technical, but the beauty of the system, which launched in 2009, arises from a few key features. One is decentralization. No person or authority controls the blockchain. In fact, it would take a massive mining hack to alter the blockchain, which is unlikely but not impossible. Bitcoin's scarcity is also a key attraction. The global supply can never exceed 21 million Bitcoins, according to the system's design. While the Bitcoin genie may be out of the bottle, it is far from omnipresent. Obstacles include technological hurdles, price instability, taxation policies, and the governments that don't want a freewheeling digital token taking over their monetary policies or financial regulations. Authoritarian governments have already cracked down. China, for instance, has become a leader in blockchain technology and mining, but Bitcoin itself poses a threat. Beijing has already banned banks and other financial firms from transacting in it and shut down domestic crypto exchanges. Beijing is now rolling out a digital yuan controlled by its central bank, partly to try and offset Bitcoin's appeal. Another hurdle for Bitcoin is finding ways to mine it without turning it into a global smokestack. The global Bitcoin network now emits 60 million tons of carbon dioxide into the atmosphere annually, roughly equivalent to countries such as Greece, according to estimates by Bank of America. And perhaps the most irritating question of all is whether Bitcoin is a $1 trillion bubble. Bitcoin's market value has pushed it past that of MasterCard, Home Depot, and ExxonMobil combined. Yet, Bitcoin acts more like a thinly traded stock than a liquid large cap. Indeed, 95% of all Bitcoin is controlled by 2.4% of all accounts, according to Bank of America, and 20% of the supply may be sitting in lost or stranded digital wallets. While Bitcoin has kicked around for more than a decade, it is now rapidly going mainstream. Trading in Bitcoin futures and related stocks is gaining momentum as Wall Street and financial technology companies invent new ways for investors to gain exposure. Banks, brokerages, exchanges, and advisory firms are building the infrastructure to turn Bitcoin into an asset like stocks or bonds, anticipating that it will work its way into 401k and other retirement accounts. Fidelity Investments and other funds are trying to persuade the regulators to approve Bitcoin exchange-traded funds, following Canada's approval of Bitcoin ETFs. Whether this will all crash isn't known, of course, which may explain some reticence to discussing it publicly. Indeed, a variety of factors could take the wind out of Bitcoin. For one, there's competition. Bitcoin is one of thousands of cryptocurrencies, many of them branching off of the Bitcoin blockchain. Ether on the Ethereum network offers some advantages. The currency can be programmed with smart contracts, meaning that the transaction between parties can include conditions. For instance, a shipment of goods from China to the US might cross the ocean at a present GPS coordinate, at which point the goods may change ownership along with a chunk of Ether. Many central banks are also eyeing digital currencies built on blockchain technology. China's move to create a digital yuan may be the first of several central bank digital currencies. Even if Bitcoin doesn't take off as a transaction currency, it could gain appeal as an alternative asset. As digital gold, it may already be pressuring prices for the real yellow metal. One way to value Bitcoin is in relation to the total gold held by the private sector, which amounts to about $2.5 trillion. By that measure, one Bitcoin could be worth as much as $146,000, according to JP Morgan. Those who say that Bitcoin is a bubble think that it is likely to stay. The World Bank points out that Bitcoin's price is fueled by several trends. the search for yield, the government's stimulus payments, demographic shifts, and technology. And while we may not think of Bitcoin as a substitute for the dollar in the US, it is far more appealing in places like Lebanon, Nigeria, and Venezuela, which have unstable currencies, hyperinflation, or potential for savings to be confiscated. There is massive appeal for Bitcoin if you live in a country with capital controls where you have uncertainty about the future of the currency, and that really is the heart of the story. While stocks follow earnings and bonds track interest rates, Bitcoin prices may simply be supported by the belief that it will one day give the dollar a strong run. In other words, there's no good reason to buy unless you think that the price is going up. However, hindsight teaches us over and over again that what might seem ridiculous, even dangerous, can quickly become ubiquitous. And the evolution of cryptocurrency, most notably Bitcoin and the blockchain technology it is built on, is perhaps the most disruptive force to date, and we all need to pay attention.